Okay, I call this meeting to order. Welcome to meeting number 148 of the House of Commons Standing Committee on Finance pursuant to Standing Order 108 bracket 2 and the motion adopted on Thursday, September 21st, 2023. The committee is meeting to discuss policy decisions and market forces that have led to increases in the cost of buying or renting a home in Canada. Before we begin, I'd like to ask all members and other in-person participants to consult the cards on the table for guidelines to prevent audio feedback incidents. Please take note of the following preventative measures in place to protect the health and safety of all participants, including the interpreters. Only use a black approved earpiece. The former gray earpieces must no longer be used. Keep your earpiece away from all microphones at all times. When you're not using your earpiece, place it face down on the sticker placed on the table for this purpose. Thank you all for your cooperation. Today's meeting is taking place in a hybrid format pursuant to Standing Order 15.1 in accordance with the committee's routine motion concerning connection tests for witnesses. I'm informed by the clerk that the committee that all witnesses, yes, have been tested, and I think everybody is good. Yep. Okay, for the second hour, yeah. First hour is everybody here is in person. No, I think we got MP Sorbara is not, but I'd like to make a few comments for the benefit of the members and witnesses. Please wait until I recognize you by name before speaking. For members in the room, please raise your hand if you wish to speak. For members on Zoom, please use the raise hand function. The clerk and I will manage the speaking order as best we can. I appreciate your understanding in this regard. Reminder that all comments should be addressed through the chair. Now I'd like to welcome our witness for our first panel today in our first hour. From the Office of the Superintendent of Financial Institutions, we have the Superintendent, Mr. Peter Rutledge. Welcome, sir. And the members look forward to your opening remarks and then to asking you questions. So the floor is yours.
Merci beaucoup. Bonjour, Monsieur le Président.
Thank you, Mr. Chair and committee members. Thank you for inviting me back in support of your study of the public policy decisions and market forces that have led to increases in the cost of buying or renting a home in Canada.
The published annual risk outlook, we remain intently focused on the key risks facing the Canadian financial system, including real estate secured lending and mortgage risks, wholesale credit risks, funding and liquidity risks, and integrity and security risks related to the geopolitical environment. With respect to the topic under investigation by this committee, I note that higher mortgage payments are taking up a larger part of some households' income, leading to more borrowers finding it difficult to pay their loans and debts. We expect rising debt service costs to be a key risk for financial institutions and their customers for the next 2 years. Having said that, I note that mortgage and household credit quality remains high by historic standards. Membres du comité, le BCF, tout comme ses partenaires fédéraux.
Committee members, we, along with our federal partners, want Canadians to access and maintain mortgages throughout the ups and downs of market cycles. And part of my role, as Superintendent of Financial Institutions, is to ensure that lenders exercise prudence in underwriting mortgages and sound risk management throughout the life cycle of those loans.
Prudential rules for mortgage lending foster a safe, stable financial system and help keep Canadians in their homes over the long term. It's our job to make sure that lenders remain resilient while adapting to evolving risks in financial markets. And with that, I'll be pleased to take your questions.
Rutledge, and I'm sure the members have many questions, and we are starting our first round with each party with up to 6 minutes of questions. We'll start with MP Chambers for the first 6 minutes.
Thanks, Mr. Chair. Welcome back, Mr. Rutledge. Thank you for your service to the country and keeping our financial system safe. The Competition Bureau has recommended that we consider changing the stress test for people who are with uninsured mortgages. The government has changed the requirements, or at least indicated that those who are insured don't have to do a stress test on renewal, so they can shop around and get a new lower mortgage rate. Is OSFI considering changes?
Thank you, Mr. Chair. So to start with the facts, the member is absolutely right in his facts. If you have an insured mortgage and you seek to renew it in an alternate lending institution, you don't have to go through mortgage stress tests or any other underwriting check. By contrast, if you have an uninsured mortgage, you do. And that is an imbalance. And the Commissioner of the Competition Bureau and I have spoken about that. From our perspective, our job is to make sure institutions underwrite mortgages safely. And one of the core principles of underwriting mortgages is if you have a new credit, do all your underwriting discipline. And so in our view, for uninsured mortgages, which B20 applies to, we ask lenders to underwrite new customers in full. Meanwhile, that doesn't apply for insured mortgagors because they have purchased a mortgage insurance policy.
Okay, I'm going to run out of time. So the question is, are you reconsidering for uninsured
Not
mortgages?
at this time, no.
Okay. So do you believe the government made the right choice, or did you advise the government when they made the choice on insured mortgages?
From our perspective, the rules from an underwriting standpoint, what is sound underwriting, makes sense to us. If you're taking credit risk new, you re-underwrite. If credit risk stays with the same counterparty, in the case of mortgage insurers, I don't think you need to. We don't think you need to re-underwrite.
Okay. By definition, uninsured mortgage holders are less likely to default. They have more equity in the value of a house. Why are we asking uninsured mortgage holders to effectively cross-subsidize the mortgage rates of insured mortgage holders?
Mr. Chair, what we ask financial institutions to do is underwrite new credit risks. I acknowledge that there is an imbalance from the experience of a borrower who doesn't have mortgage insurance as opposed to one that does. It's an imbalance we accept because of the sound underwriting principles behind it.
Okay. If the government has made a choice on insureds, we're creating a two-tier kind of borrower where the borrower that has less risk to default actually it has more strenuous stress test requirements. In 2021, when stress test came in, I supported that because it made sense because rates were at an absolute rock bottom level. We're now at the top of the rate cycle, which is according to central banks. Shouldn't we be giving consumers a little bit more flexibility to shop to get a better rate?
Mr. Chair, our mandate is prudential to ensure that the lenders who provide mortgages are safe. We think in maintaining sound underwriting policies, which includes re-underwriting or underwriting new credits, even if they're switching from another institution, that's the appropriate thing to do.
Okay. Thank you. I'd like to talk about Basel IV for a second. The Fed has been very clear. They are making material changes, may even include delaying, may even put out new rules for comment again. They said they have never seen as much feedback on these new rules as possible. Why is Canada sticking to an accelerated timeline to implement Basel IV?
Mr. Chair, in implementing Basel IV, we also call it Basel III Endgame, but in implementing the new changes from Basel, Canada has is actually behind its initial schedule, but ahead of most of its peers. We moved on these because they're based on sound prudential principles that lead to a more stable financial system in our view. With respect to the final leg of the changes we're making, which is known as the standardized floor, which very complex, but it's basically a check on the models banks use to allocate capital. We are well ahead of our peers. And over the last 9 months, it's become quite evident that our lead will at least stay the same or increase. And for that reason, we've been engaging with industry to consider what the right schedule should be for that rising floor. And we'll have more for you on that this summer.
Thank you very much. So you're aware that at least some banks have said in the Canadian context it may require banks to shed about $270 billion of risk-rated assets. Like, you don't dispute that may occur?
Mr. Chair, my math doesn't quite align with that math. But what is indisputable is that a rising floor will increase risk weights, which will therefore increase capital. And while we think that is a sound approach, it is imbalanced with our global peers. And that imbalance, the industry players argue that that is an imbalance we need to look at. We would agree with that, and we've been looking at it.
Last question before the chair cuts me off. Will you commit to not making a decision until we see what the U.S. decides to do?
Mr. Chair, I don't want to make any firm commitments here today until we're done with the due diligence behind this process, but perhaps I could come back to that answer in later this summer.
Thank you very much.
Thank you, MP Chambers, and now to MP Baker.
Thanks, Chair, and thanks, Mr. Rutledge, for being here today. Just for the folks who are watching at home, for constituents and Canadians who aren't familiar with you and the organization and what you do with OSFI, could you just share very briefly, because I have a few other questions, what is OSFI's role? What is your supervisory and regulatory role?
Basically, Parliament asks us to do two things. Ensure the institutions we supervise are in sound financial condition, and ensure they have policies and procedures in place to protect themselves from threats to their integrity and security. That's it.
What would happen if they weren't in sound financial position?
What would happen if they were not?
Were not. What would that mean to Canadians if they were not?
Well, if we're doing our job right, we see that coming, and we oblige boards of directors to take prompt corrective action to forestall that.
But why should Canadians want, this may be a straightforward thing from your perspective, but just so people understand, what are the consequences of one of the banks or multiple banks not being in a sound financial position?
Mr. Chair, you to answer that question, just go back to 2007 and 8 in the United States, and you saw substantial across-the-board weakness and sometimes failure of financial institutions, which contracted the availability of credit, which then contracted the economy and led to unemployment.
So basically a lot of economic hardship for Canadians if the banks aren't in a strong financial position.
Yeah.
Right. Okay. And so what are some of the steps that you've taken to cool the housing market? And let's start there. Let's start there. What are some of the steps you've taken to cool the housing market? Because as you know, right, my constituents, all our constituents are struggling with rising housing prices.
Mr. Chair, I would reframe that slightly to say we've taken steps to make the mortgage credit system a little bit safer, which in turn may cool the housing market, but our primary objective is credit quality. So what we've done is we put in place underwriting standards, mortgage underwriting standards that we oblige all banks to follow, which causes them to make safer mortgages, which then sustains and makes their institutions more resilient. The key thing that we do, and the most important thing we do, is we set a common baseline. If all competitors in the system think they're all following OSFI's sound underwriting policies, then they themselves will follow sound underwriting policies. If we don't have those in place, they'll think, well, my competitor across the street's cheating, so I'm going to cheat because I have to compete. And so there is a game theoretic aspect to what we do. We put a baseline of sound underwriting standards in place to sustain the system through ups and downs.
That makes sense, but let me sort of challenge that a little bit. Some of my constituents have said to me, well, look, if we could make it easier for me to get a mortgage or allow me to borrow more, then I could afford to buy a house I wouldn't otherwise be able to buy, or I'd be able to stay in the house that I'm currently in and now can't afford to stay in because my mortgage rates have gone up. And so, wouldn't it help Canadians if we effectively loosened the reins a little bit and made it easier for them to borrow?
Mr. Chair, loosening the reins will typically mean, at least as I interpret it, lessening or lowering underwriting standards. In an individual's case, you're right, someone might be able to get a little bit bigger house or stay in a house that interest rates have made more difficult to afford. But over time, we would be building credit risk in the system that would ultimately, in our judgment, metastasize into a broader financial stress event that would be costly to Canada in the long run.
What I hear you saying, and I don't want to put words in your mouth, tell me if this isn't correct, but what I hear you saying is you're you're focused on making sure that the banks are in a secure financial position, because if they are not, we could face tremendous economic hardship, as you described. You described an example of that as to what happened in 2008. And so that is, but it is in pursuit of that goal that there are some restrictions that you require banks to put in place in terms of how much they could lend to certain individuals, even though that's harder for some Canadians makes it harder for some Canadians. Is that correct?
Mr. Chair, I'd agree with that. 2009 and 10 teach us that this resilience of Canadian banks produced a less severe recession in Canada than peers.
So I understand the part about making sure the banks are in a strong financial position. Like, I was in the U.S., I was working in the United States when around that time, 2007, 2008, and I remember, the banking crisis there and the economic hardship that Americans and Canadians felt, but especially Americans felt around that time. But I think what I'm asking is it sounds like you need to find a balance, right? Because you could be even more restrictive on the banks, right? That would mitigate risk even further of the banks having economic hardship, but that would make it harder for Canadians to get mortgages. So am I right that you're trying to strike a balance at all times?
Mr. Chair, yes. And our Act obliges us to do so. It instructs OSFI to allow banks to compete and take reasonable risks. And that is a check on what we do.
So last question then. So how do you respond? Because there are people out there who have been critical. How do you respond to the criticisms that recent guidelines that OSFI has put in place end up hurting Canadian consumers, and especially because they make home ownership more difficult to attain?
Mr. Chair, my response to that criticism would be we're making home ownership more safe for Canadians over the long run, so that the system overall produces long-term outputs that are good for the country, which is people buy homes, they pay down their mortgages, and they stay in their homes even when there's a recession.
Thank you, and thank you, MP Baker. And now we're going to go to MP Trudell. I'll just say that, so many members that are not permanent members of our Finance Committee always want to come to Finance Committee, know how hardworking we are here, and we have so many special witnesses. We also have MP Hobach is with us, MP Kayabaga, and welcome to all of you to Finance Committee. And now MP Trudell for 6 minutes, please.
Merci.
Thank you. Thank you, Mr. Chair. And thank you, Mr. Routledge. I heard you speak French earlier, and I was very pleased. Maybe you'll be able to answer to all my questions in French, but regardless, the important is that you spoke French a little bit, but I'd like to talk about the housing crisis. We know that housing is the most important expense for households. It's a huge cost. We are in the middle of a horrible housing crisis. Last year, I did a tour throughout Quebec to document this, to meet with people who are helping people who have housing issues, and the situation is very difficult. Each and every day, we see tent encampments in different Canadian cities, Vancouver, Toronto, Montreal, and now we even see this in very small municipalities in Quebec where no one had ever seen a tent encampment. And so here we hear that we need to build 5.8 million housing units in the next 7 years. In Quebec, the best year for construction of housing units was 70,000. So in Quebec, we need 1.2 million housing units. So between now and 2031, we would have to find a way to build an ecosystem assisted by governments, and that's what we're hoping for, to build 3 times more housing units that we've ever built in the past. So the challenge is huge. So first of all, I'd like to ask you, since the banks are going through these studies and the banks are saying this, the figures are coming from banks, 5.8 million housing units. I have not heard one single politician say, okay, we're going to find a solution. Because it's huge. We need a type of Marshall Plan for this. It's flabbergasting. all levels of government should be sitting together to try to say, okay, here we have a huge challenge. And we're talking about people sleeping in the streets and single mothers. We saw in Gatineau last year a young pregnant lady, and she had to give birth in a tent in the middle of a city in Quebec. And how can we accept this as a G7 country? I personally don't accept this. And so how is it possible, or your office or financial institutions, how could you advise government, or how could you set forth policies so that we could at least hope to dream that we'll get closer to this objective of 5.8 million housing units in the next 7 years?
Monsieur le Président,
Mr. Chair, I do agree with the member. We need a strategic plan to build more housing units here in Canada. I'm trying to improve my French, so I'm better in English. I'm going to switch.
I agree with the notion that we need a national effort to bring our housing construction up to the level of household formation. And in my first year as superintendent, I gave a speech and I said a major potential risk is that our household formation well exceeds the amount of construction, household construction in the country, and that presents a long-term potential risk to the financial system, and I still hold that. There has been progress made, and I'm optimistic, but we have to do more to bring housing construction up to household formation. And when that happens, the stresses in the housing market, which make homes more difficult to afford, will lessen.
Soyons plus techniques. Est-ce que vous pensez, vous, que...
Let's get a little bit more technical now. Do you think that simply building housing, any type of housing units, because housing is being built in my riding in Longueuil, condos are being built, $2,000, $3,000 a month, so people who have revenues, well, the housing crisis exists for the middle class down. People who have $150,000 in revenue, technically, they are able to afford condos that are being built. So do you think that simply building a housing, regardless of the form of housing, could bring forth, could reduce housing costs? If we had a strategy for building these 5.8 million housing units, could this stabilize the market? Could we find a certain amount of affordability for those who have middle class or even lower income families?
Mr. Chair, the housing, because of this imbalance between household formation and housing construction, housing has been imbalanced, and prices, when demand is greater than supply, prices go up. If we had a constructive strategy that was useful for the federal government and useful for provinces and municipalities, and led to responsible but more homes being built in a responsible way, the supply-demand pressures would abate, in my view, and price pressures would lessen, and that would address the affordability concerns that Canadians face today.
Merci, merci MP Trudel. And now we'll go to MP Davies for 6 minutes.
Thank you, Mr. Chair. Thank you, Mr. Rutledge, for being here. On May 22nd, OSFI's annual risk outlook for the fiscal year said the following. Of the mortgages outstanding as of February 2024, 76% will be coming up for renewal by the end of 2026. Canadian homeowners who will renew their mortgages during this time period could potentially face a payment shock. If you could, Mr. Rutledge, could you quantify the impact you expect this potential payment shock will have on the rate of residential mortgage loans, either falling into arrears or defaults by the end of 2026? In other words, are we facing a mortgage renewal cliff?
Mr. Chair, I wouldn't use that analogy to talk about the refinance risk that's present. For mortgagors who have taken out 3 to 5 year fixed mortgages and face renewal over the next 2 to 3 years, the stair step up in higher mortgage costs will be more manageable in the 15 to 30% range, just depending on the timing of their last mortgage. And so far, it appears to us that Canadians are managing that increased cost. There is a small component of the mortgage market, of mortgagers who, in particular during the pandemic, took out variable rate mortgages that had fixed payments. Those folks could face mortgage payment increases of around 50%. It varies by mortgage and timing, but 50% is sort of a good ballpark. That is a very significant shock to monthly finances, and one we're very concerned about. Now, we have an early indicator on that risk, and that is people who took variable rate mortgages with variable payments. By and large, they're managing that rising cost of interest, but their delinquency rates are higher than people with fixed. But it is not dramatic, it is incremental.
So what impact, if any, do you expect that an increase in residential mortgage loans falling into arrears or defaults will have on housing prices in Canada?
Mr. Chair, hard to predict the future, but I'll try and give some perspective on that. The issue right now, the prior member spoke about, which is supply-demand imbalance, means that if we had more than normal level of foreclosures and therefore greater amounts of supply on the market, demand conditions are such that it would likely take up much of that supply and housing price pressure would not be as significant. And I would point folks to the house price indices, which although they've been flat for 2 to 3 years, haven't fallen despite a very substantial increase in interest rates.
I want to shift to other kinds of credit, if I could. On May 29th, a news release from Canadian Mortgage and Housing said the following. For the first time since the beginning of the pandemic, mortgage delinquency rates are trending up. Vulnerabilities first detected in credit card and auto loan markets are therefore moving into the mortgage market as well. This suggests the financial buffers built up during the pandemic are becoming exhausted by some households. Do you agree with that assessment? And I'm curious what comment you may have on that.
Mr. Chair, yes, I do. That's what the data indicates. What we're seeing is that rising mortgage costs and rising interest rates are first impacting households that tend to have a little bit less income. So say in the lowest quintile of households. Those households typically do not own homes, but they do have credit cards and car loans. So we are seeing rising delinquencies in that space. And that is a concern. What I can tell you is that the financial institutions we regulate are absorbing those higher credit costs without material threat to either their earnings or their capital.
Now, OFSI also commented in May, they said the following: changes to the economic environment, such as weakening labor markets and declining rates, could reduce the payment shocks outlined above. Could you elaborate on how the combination of weakening labor markets might impact the risk associated with real estate secured lending and mortgages?
Yeah, Mr. Chair, weakening labor markets would, if history is a guide, likely be followed by falling interest rates, which would then in turn lower the refinance risk faced by current mortgagors.
And if interest rates are reduced, does this not have a risk of restarting the cycle of cheaper money, putting more people in the market, therefore putting additional price pressure on housing?
Mr. Chair, the answer to that question is yes, it does. And we implemented a policy recently on mortgage underwriting that will check the tendency of banks and homeowners to lever up in that environment. And that check is known as the loan-to-income ratio test.
Mr. Chair, do I have time for one more question? Okay, I'll throw it out there.
MP Davies, go ahead, please. Yes. Sorry.
Thank you. Mr. Rutledge, you talked about the impact of variable rate mortgages. In your view, have Canadian financial institutions taken sufficient steps to date to mitigate the risk associated with variable rate mortgages, especially those with fixed payments?
Mr. Chair, my answer to that would be a qualified yes. The folks we're particularly worried about, so folks who have that product, that have negatively amortizing mortgages or interest-only mortgages. The numbers over the last 18 months have fallen from about 270,000 households to about 175,000 households. As a result of households and financial institutions taking preemptive steps to avoid more problems later down the road.
Thank you, and thank you, MP Davies. And
Thank you.
That is the time. And now, members, I'm just looking at the time. We do have enough time for a full second round. In this round, we're starting with MP Lawrence for the first 5 minutes.
Thank you, Mr. Chair, and thank you for coming today, Mr. Rutledge. Really appreciate it, and I think Canadians will be glad to hear from you as well. There are risks and challenges whether the housing prices go up or go down, right? And sort of keeping it on that narrow path that I believe is one of your goals there. So I want to talk specifically though about the capital gains and of course the increase in the inclusion rate of capital gains and the impact that this will have on the housing market. So first of all, I want to talk about the way that the Liberals designed the implementation, of course, that creating conditions for a fire sale up until June 25th, which is just around the door. Of course, that's going to, in my mind, if you're a cottage owner and you want to get the lower rates of the inclusion, you'll want to sell before June 25th. Do you think that this will have any material impact on the prices? And obviously, if the housing prices go down, that puts the risk of mortgages going underwater. So.
Mr. Chair, I think it's a little dangerous for me to comment on tax policy, but I'll address the question about the housing market and the effect of a sudden burst of supply. So if there were a sudden burst of supply in any particular regional market and demand was the same, it'd be downward price pressure. We have not seen that phenomena yet in any of the major markets we cover. I'd have to come back to you on specific, more local markets.
Thanks. Thank you for that. And I'll maybe frame this question towards more generality, so it might be a little bit easier for you to respond to. But the other question I want to ask is also relative to tax increases. This is on home building. Your testimony earlier was that we need greater housing construction in order to bring housing prices back to reasonable levels of affordability. If, in fact, a government increases taxes of any sort, that will, of course, will reduce or limit supply depending on the amount of the taxation of various other factors. Is that correct there?
Mr. Chair, you're asking me an economic tax policy question. I'm just superintendent. Marginal increases in the cost of housing construction, I have not seen cases where that has materially impeded supply.
Right. Okay. So maybe I'll just go a little bit further on that, if I could. If it's not marginal, though, if it's material cost, the increase in the inclusion of the capital gains rate could cost a developer millions, if not tens of millions of dollars. And often these projects are marginal. They might be $1 million or $2 million either way, whether you go ahead or not. Surely you'll agree with me, Mr. Rutledge, that now is not the time to put in additional barriers for builders to build houses when, as the president, I believe, of the home builders said, there's not a chance we're going to hit our target.
Mr. Chair, I'm going to politely refrain from entering policy debate around tax policy. I will stand by my earlier statements about the importance of bringing supply into line with demand in terms of housing and household formation.
Okay. Thank you for that, and I do appreciate you trying your best there. But I just want to put a little bit. I'll switch subjects here a little bit around the sensitivity of interest rates with respect to the housing market. So, if in fact, like I said, we can get in trouble if houses go too low or too high. Are you concerned that a dramatic decrease, we've got 0.25, barely anything, but if in fact the Bank of Canada were to move too quickly, that might drive the housing prices too high? And are you comfortable with that now with the 4.5 rule or the 450% rule that we'll be able to protect ourselves from buyers taking on too much?
Mr. Chair, I think the advantage of this LTI requirement that we're putting in I should mention it's just for institutions. It doesn't affect individual borrowers. But what it would do is that if rates did fall very low, it would act as a backstop to the mortgage stress test and tend to limit the amount of excessive risk taking in the mortgage space.
Okay, and what about right now for the payment shock that you've talked about in your report there? If in fact the housing market caught fire again because of the interest rates or whatever, what's your level of discomfort? Is it if the housing market went up 10%, 20%, 30%, where we would start seeing issues with the housing market there?
Mr. Chair, if we saw a significant increase in prices, the problem that I've spoken to with respect to variable rate mortgages with fixed payments would actually lessen, because people facing those higher payments would have a more robust market in which to sell their homes and therefore cure their debt service issues.
Thank you, and thank you, MP Lawrence. And now to MP Zerowitz, please.
Thank you, Mr. Chair, and thank you, Mr. Rutledge, for being here today, and thank you for your service to our nation. At a breakfast that a number of us attended yesterday with Bank of Governor officials, we were talking about housing, and I learned that in a number of different countries, they do very different things with mortgages. Some countries allow you to port mortgages over 8 years and 80 years and a number of generations. Some countries like the U.S., you could lock into a 30-year mortgage, but you have tons of flexibility in terms of how much to pay off your mortgage at any one time. And so my question to you is, have you been in touch with other regulators around the world? And is there anything we could learn from them, or ideas that perhaps we might want to consider adopting here as we're trying to struggle with the affordability and housing crisis we have right now, that you might be able to contribute to this conversation here today? Thank you.
Mr. Chair, every country's mortgage system is a reflection of its history and its regulatory policy. I would start by saying Canada's mortgage system has worked quite well. Many of my peers are envious of the track record of credit quality in our mortgage system. A hallmark of it is we have relatively shorter amortization periods, so people pay down their mortgages, and the lower your debt goes, the less risky your financial situation is. When you have longer mortgages, your debt stays around for longer, and it is a higher risk issue. The Bank of Canada has done interesting work on how to improve our marketplace to make longer-term mortgages available. So if households, if they so choose, can term out their mortgages for longer than 5 years at a reasonable price. They can do it right now. It's just the prices are fairly expensive. And I'd refer you to them. They've done a lot of good work, and they have a lot of good ideas. And in aggregate, if the product set evolved in that way, that would be a net benefit to the system, because it would give mortgagors more choices to manage their personal financial risks.
Appreciate that, and I do appreciate the work that the team at the Bank of Canada is doing around this. I think it's at a time where we're moving into a different era where house prices are very high and will probably continue to be very high moving forward. So how is it we can provide flexibility for Canadians in a way that doesn't sacrifice the credit quality of our banks, but allows us to live in an affordable way and continue to own homes? My colleague earlier today was talking to you about the stress test. In the early days of the pandemic, we heard from CMHC, the head of CMHC then, and we talked about the stress test and how important it was in order to ensure that during a time of emergency, global emergency and global crisis, many people would continue to be able to keep their homes because of that stress test. Would you agree that the stress test helped us during the pandemic and thereafter to continue to allow Canadians to be able to afford their homes?
Mr. Chair, the mortgage stress test did improve credit quality during the pandemic. And more critically, I have been pleasantly surprised at the very low level of delinquencies in Canadian mortgage space. And I attribute that to 6 years of mortgage stress test, primarily.
Thank you. I appreciate that. Our latest budget has introduced open banking. Most countries have had open banking for a number of years. I think Australia is on their third or fourth version right now. And I wonder whether, from your perspective, from OSFI's perspective, there's any additional work that you need to do to continue to ensure credit quality within our financial institutions because of open banking, or any other work that you feel you need to be doing or thinking about moving forward.
Mr. Chair, two-part answer. The first part is we saw it coming and we developed a regulatory guideline on third-party risk management, which should help the banks we regulate manage new relationships that will come as a result of open banking. Longer term, we have to be watchful that those new players, that if they do decide to innovate beyond their immediate business model, which is to enable customers to own their own banking data effectively, if they move from that model to one that involves taking deposits and making loans, that they do that in a regulated space. If we let that activity go unregulated, we see that usually leads to bad outcomes.
Thank you.
Zerowitz, and now to MP Saint-Marie for 2.5 minutes.
Oui, merci, Monsieur le Président.
Thank you, Mr. Chair. I'm going to begin with a point of order. When the Bank of Canada appeared before the committee, a few of us MPs asked questions, and he said that we would have written answers. Mr. Morantz, Mr. Chambers, myself, and others, we received an answer last Friday, and so I'd like to make sure with you and the committee that we're able to use these answers, that they be made public, and that we be able to use them as if the bank had given these answers during the committee session.
Bon.
Yes.
Très bien.
Okay. Members, yeah. Yes.
Merci, Monsieur.
Okay,
Merci, Monsieur.
Thank you, Mr. Chair. So, Mr. Routledge, thank you for all your work, and thank you for being here today. The Canadian Bankers Association calculated that last February, 0.19% of mortgages in Canada were delinquent, so that the payments were not made for 3 months. And how do you expect that this proportion will increase due to the large amount of mortgages that will renew between now and 2026? How, with this mortgage default, how might it lead to a loss for financial institutions? And what measures are being implemented in order to reduce these risks?
Mr. Chair, that's correct. 0.19% is the delinquency rate. To put that into context, we've seen that rate go as high as 1.00%, so it's still fairly low. Yes, unfortunately, I do expect that rate to continue to go up as Canadians renew, and some have difficulty with that. What we've done is put in place some pretty serious capital rules or capital expectations to ensure banks have buffers to absorb losses bigger than they expect. From what we're seeing, the delinquencies and the losses they're producing are a low enough level that the banks, particularly the large banks, will handily absorb those losses through their earnings.
MP Saint-Marie, and now we will hear from MP Davies for 2.5 minutes.
Thank you. I think if I have this right, there's been a recent decision to increase amortization periods to 30 years. What impact might that have on your analysis?
Mr. Chair, I believe the member refers to Budget 2024, and in some cases, for first-time homebuyers, they'll be able to take 30-year mortgages out if the mortgage is insured. Net, that will increase buying power of home buyers, and it's a very, very limited increase. It's first-time home buyers. But if your mortgage amortization period goes up from 25 to 30 years, your monthly payment goes down, so you can afford more house.
But doesn't it also bring more people into the market, thereby increasing demand?
Yes, at the margins, that would lower the monthly mortgage costs, and therefore you might open up the market for more buyers. However, home sellers know this. And what I expect a rational home seller to do would be, in realizing their people looking through their house at an open house have a little bit more buying power, I think they'll increase prices, and I think the benefit will be relatively short-lived.
Thanks. Finally, I think we've recently, in the last couple of years, put a ban on foreign buyers in the residential market. I'm just curious if you have any comment on that. Are we seeing any consequence or impact of that yet?
Mr. Chair, that ban is fairly limited, and so we haven't seen any real effect on housing demand from it.
I'll flip that around. What's been the impact of foreign capital in our residential markets in Canada over, say, the past 10, 15 years?
Mr. Chair, not to be overly technical, what is foreign capital is foreign capital. Certainly, it's someone who doesn't live in Canada buying a house in Canada. But
that's what I mean.
Yeah, that's low. What's driving demand for housing, though, is new Canadians coming in with financial resources who then buy a home. I don't consider that foreign capital, but it is sourced from outside Canada, and it is adding to demand for housing in Canada.
Thank you, MP Davies.
Thank you.
And now we'll hear from questions from MP Morantz for 5 minutes.
Thank you, Mr. Chair. Thank you for your testimony today, Mr. Rutledge. It's been very interesting. One of the things that OSFI regulates are basically the capital reserves of the banks. What I think you call the domestic stability buffer. What ordinary Canadians could kind of think of as money set aside for a rainy day. And last year, I know that I assume out of concern for the stability of the banks, you increased that requirement from 3 to 3.5%. Now, the language that you used in your report recently, calling when people refinance or have these variable rate mortgages, when their new payments get locked in, payment shock, that's very strong language. You don't use that language unless you're really concerned about something. Now, today it sounds to me like you've kind of poured a little water on that because you kind of narrowed it down to just people who are on the variable rate without locked-in payments. But I still have a couple questions. Are you concerned enough to increase the domestic stability buffer again this year? Or are you satisfied that people are coping with their payments sufficiently that you could actually reduce it back to 3%?
We intend to make an announcement on the domestic stability buffer next week, so I won't scoop myself. What I can refer
Oh, come on, just tell us.
What I can refer you to is that in December of this year, we said that the vulnerabilities had stabilized, and so there was no need to raise the buffer any further. And on empirical data, vulnerabilities have not worsened since that time.
So why use that language? It's clearly inflammatory language in a public report. Yeah, why use that language? I mean, you don't use it unless you're concerned about something. It doesn't sound like you're all that concerned based on your testimony here today.
Mr. Chair, I guess we use the language because that's how we talk about it with the institutions we regulate. That's the language they use. Now, the payment shock, the folks that are exposed to particularly acute payment shock are relatively, it's not a lot of people. I mean, 170,000 I acknowledge is too many, but there's 5 million Canadians with mortgages. And so the issue we have with that risk concentration is, it will harm Canadians. It will, the Canadians who have those mortgages, if they do suffer that payment shock, it'll strain the earnings of the institutions. And it is an unnecessary risk concentration that, all else equal, I would have rather avoided. And I use the term because that's what we use in the industry, to be honest.
I just want to circle back to a line of questioning that Mr. Chambers was asking about earlier. You admitted that there's an imbalance, that people with uninsured mortgages have to have their credit reassessed, and those with insured it really is kind of backwards. You know, when you, as Mr. Chambers pointed out, that people who have better credit and more equity in their homes have to go through that. You're saying here there's an imbalance, but at the same time you said you don't plan to do anything about it. So you're okay with a certain group of Canadians being treated unfairly when it comes to their mortgages compared to people who have insured mortgages? That's okay with you?
Mr. Chair, I'm okay with banks applying underwriting standards equivalently across the system. If we were to lighten underwriting standards vis-a-vis the MQR, well, that comes from Guideline B20, which also calls for new credits to have the collateral appraised, to have the income of the borrower checked. In other words, if you loosen one underwriting standard, you're probably going to loosen more. And our mandate calls on us to be fairly vigilant on this. My recognition that there is an imbalance from the perspective of homeowners who have insured versus uninsured, I hold to. It is, from the perspective of those home buyers, if I were a home buyer facing that, I would feel like it was an imbalance. The Commissioner of the Competition Bureau and I have spoken about that. And I think it is a legitimate challenge to say to OSFI, can you do something different so that imbalance goes away? We are thinking about it, and I think it's a fair critique.
Great. Thank you.
Thank you, MP Morantz. Okay, for our final 5 minutes for the superintendent, we've got MP Sorbara, please.
Thank you, Chair, and welcome everyone. And Peter, nice to see you again. I think if I age you and age myself, we would go back about, say, 12 years. And I know you've had a number of roles, from being a bank analyst at Moody's and now to this position at OSFI. So congratulations on your career path and your appointments. Very well deserved. I still remember listening to you on the conference call, on the bank analyst conference calls with the bank earnings, and I was on the bond side and you were on the equity side. Peter, the one thing that we know about the banking industry and with regards to liquidity and funding, and we know when there's a banking crisis, it always comes down to liquidity and funding, and you can even take that to the consumer side as well. I've read the annual report and I've sort of schemed over it and stuff. On the funding and liquidity risk side, what's your view on that with regards to the Canadian banking system?
Mr. Chair, we had a stress test of that in 2023, and I don't think it'd be right to say I'm surprised, but I was certainly reassured that during that period, Canadian banks, by and large, were safe haven investments. In other words, they tended to see positive inflows. And that would extend to smaller and medium-sized banks who to be candid, we had extra vigilance over, and we saw very stable funding flows to those institutions. So a safe, regulated system with a lot of capital and liquidity buffers is viewed by international investors as a safe haven system, and it's an asset that I want to do my part to protect.
Okay. With regards to digitization and any sort of, digital currency, open banking, portability, what of those things, if I can use it in this term, keeps you up at night and makes you think about, because OSFI has a mandate, you can try to quantify risks, and that's the best way we can do with arrears and so forth and domestic stability buffers. But on that side there, how should we as legislators think about that side?
The risk that keeps me up at night is you'll get unregulated business models emerge that compete directly with regulated institutions. For example, there are some stablecoin arrangements that, when I look at their balance sheet, look an awful lot to me like banks. They take deposits for a very short period of time and they make long-term investments. Those institutions, if they have that balance sheet that looks like a bank, they should be regulated like a bank, and that's what keeps me up.
And I also would like to, I want to add on that, if there's asset liability mismatch on those balance sheets, that would obviously be a cause for concern, would it not?
Mr. Chair, one needs only look at the crypto winter or the case of Silicon Valley Bank to answer affirmatively yes to that.
Okay. If Chair, just please cut me off when my time is up. One final question. Arrears in Canada. We know that Canadians, we know their mortgage debt is backed by an asset. It's a very good asset. The arrears, the trends, if I had to qualify them and say they are very stable, would that be a fair term?
Mr. Chair, I wouldn't use very stable. I would use very low and deteriorating incrementally and not dramatically.
Thank you, Chair. I'll stop there and turn it over.
Okay, well, thank you, MP Sorbara, and we want to thank Superintendent Rutledge. Thank you very much for coming before Finance Committee on our housing study, and we wish you the best with the rest of your day. Thank you. Appreciate it. Members, we'll suspend now as we transition into our second panel. back with our second panel on policy decisions and market forces that have led to increases in the cost of buying or renting a home in Canada. And with us for our second panel, we have from BMO Bank, Bank of Montreal, we've got Mr. Robert Kavcic, who's a senior economist there. Welcome. From members, we are having technical challenges, I understand, with Desjardins Group, and Monsieur Jimmy Jean may not be able to be with us for this panel. And from the Royal Bank of Canada, we have Assistant Chief Economist Robert Hogue. Welcome, Mr. Hogue. From Scotiabank, Vice President, Head Inclusion, Resilience Economics, Rebecca Young is with us. And from TD Bank Group, Economist for TD Economics, Rishi Sontai. So welcome. And with that, we're going to hear first for opening remarks from Mr. Kavcic, and for up to 5 minutes, please.
Great. Thank you, Mr. Chair, honorable members. Thank you for the invitation to appear at the House of Commons Finance Committee. My name is Robert Kavcic, Senior Economist, BMO, covering analysis of housing market issues in Canada. And my remarks and commentary today come from that perspective as a macroeconomist on the housing market. So housing affordability, I think, is pretty clearly a significant economic and social issue, and largely reflects the imbalance between demand and supply in the market. And so by most measures, housing affordability hasn't been this difficult from the perspective of a new homebuyer since 1990. Rent growth has also accelerated well in excess of income growth. And looking back at these measures, affordability, I would say, has really become an acute problem over the past 3 years or so. And in fact, when you look at our affordability measure that accounts for income, interest rates, home prices, it was more or less right in line with the 40-year average as recently as 2019. So the question is what has changed in that short period to cause a major supply-demand imbalance and drive such a dramatic deterioration in affordability? And I think one popular narrative is that Canada just isn't building enough homes, but my takeaway from the housing data, from the labor market metrics, and speaking with industry participants across the country in home building, is that the industry has been running at pretty well full capacity. So in other words, we're already building almost all of the housing that we possibly can, just in a natural response to market conditions. In the 5 years through 2019, just as an example, housing completions have averaged just over 190,000 units. And in the last 3 years, as affordability was deteriorating, housing completions rose by about 20%. The current number of units under construction is at a record high in absolute terms, or if you adjust it in per capita terms. So the supply side of the market isn't getting worse. It's just a matter of not being able to keep up to demand. So part of that demand growth is fundamental. We have very strong demographic demand from the millennial cohort. At the same time, we've seen international immigration rise from about 450,000 per year before the pandemic to almost 1.2 million people in the past year. And this is a historic demand shock that does present a challenge to infrastructure, including housing. Now, to be very clear on this, I do believe that there are long-run benefits to a robust international immigration program, and they are significant and they should be maintained. And we've shown an ability to meet housing demand created by that robust permanent resident program. But an additional 800,000 non-permanent residents in the past year has pretty clearly been difficult for the market to absorb on the supply side. And that is acutely reflected in surging rents. And then separately on the demand side, interest rates were cut to historic lows when the Bank of Canada was easing during the pandemic shock, and until they began tightening policy in March of 2022. And of course, deeply negative real interest rates drove outsized gains in house prices, which itself bred some speculative psychology in the market. And that market psychology drove prices well in excess of underlying income, interest rate, and demographic fundamentals, which we think are the root of house prices longer term. So Higher interest rates have since broken that psychology and have pulled prices down by 20% or more in some markets, but affordability won't necessarily improve until rates fall further, prices fall further, or incomes are allowed to gradually catch up over time. And they are, but it takes time. So putting this all together, I think in summary, the demand supply imbalance in housing has been created most acutely by surging demand, and the supply side is really doing all it can to keep up. So measures to improve the responsiveness of housing construction are certainly encouraged. The demand curve, though, seems like it is much easier to move in the short run. And so appropriately calibrating demand to match our ability to provide adequate housing supply over time is probably where we have the biggest and importantly most achievable impact on affordability pressure in the near term. So thank you for the opportunity to provide opening remarks. I'll be pleased to answer any questions later on.
Well, thank you, Mr. Kavcik. And now we'll hear from Mr. Hogue from RBC.
Well, good afternoon, Mr. Chair and committee. Thank you for the opportunity to be speaking to you today. And it's always a curse of going second because a lot of the points that were raised beforehand totally are part of my opening remarks here. But what I would add is...
Not to interrupt, Mr. Hogue. Yeah, we're having some challenges with your mic or headset, or we're getting a lot of cracking coming through. How are the interpreters?
Okay.
No. If you can unplug and then replug in your headset, see if that will help. If you could just do a little test.
For now?
If you could keep speaking.
All right.
No, I think it's still,
right.
the quality is very poor and it's not possible. So I'm sorry, Mr. Hogue, but we're not going to be able to hear from you. Now we'll go to Scotiabank members, and we'll hear from Rebecca Young, please, for up to 5 minutes.
Thank you very much. I'm pleased to have this opportunity to provide comments today. My name is Rebecca Young. I'm a Vice President, Head of Inclusion and Resilience Economics in Scotiabank Economics. I'll be providing perspectives from a macroeconomist perspective, but also in my role, I provide thought leadership on sustainable economic growth by taking a longer-term look at structural forces impacting Canadian welfare. So clearly, housing is one of those issues. Now, housing affordability in Canada has clearly been on a path of deterioration over the past few years, but the erosion of affordability has been going on for decades now. And market forces have been a big part of this story. And picking up on some of what my colleagues said, household income has been actually a positive story, is that household income for the average Canadian household has been outpacing inflation fairly consistently over the past few decades. This has increased their purchasing power. And while interest rates are currently high, they have been trending down structurally for decades, so making it cheaper for Canadians to finance homes over time, and again, increasing their purchasing power. Demographics are another obvious side of the demand equation, and this includes both a growing population, but also an aging population. And so what we see is that the occupancy, or the number of individuals per household, has been declining over the past few decades. And as a result, the demand for homes has in fact outstripped population growth over the past few decades. And I would just note on aging, because we are aging as a society in Canada, it's important to acknowledge that many more Canadians want to age in place. And in some cases, the alternatives like downsizing to a condo can in fact be more costly than staying in place, even if it means more bedrooms sitting empty. Now, supply no doubt has been a major binding constraint against these demand and demographic-driven forces. Again, looking past, the last few years, rather look at the past few decades, there has been an erosion of the elasticity or the responsiveness of supply to housing demand. And the reasons are numerous, well documented elsewhere, from regulatory to zoning issues to escalating development charges. Labor is another one of the challenges, that despite record high number of workers in the construction industry, the number of homes that we're building in Canada has not substantially changed on a trend basis. And we see CMHC has attributed this both to productivity declines in the sector, as well as regulatory hurdles along the way in a very highly fragmented sector. But the net effect is that it is taking longer and it is more costly to build homes of all types in Canada today. But returning to the bigger picture, that all of these factors have been amplified over the past 3 years to push what's been a slow burning affordability path to an acute one. And there is no panacea to restoring affordability. That we do think priorities should be placed on supply with a broad definition to include related housing infrastructure. And that care is needed when we look at demand side measures, given the risk of further exacerbating affordability. And we should also be noting changing societal preferences and needs being taken into consideration. So, Canada should be able to slow the acceleration of home prices over time, but this is going to take concerted and coordinated action across all levels of government and collaboratively with private sector and social purpose organizations. However, even if the home price appreciation is slowed or even decelerates modestly, there will be a subset of Canadians, namely lower fixed income Canadians, for whom appropriate shelter will still be unaffordable. Canada will likely need targeted solutions here. And I'll just elaborate very briefly on this point that we did publish a paper last year titled Canadian Housing Affordability Hurts, which has been raised by this committee a few times. I just underscore that a key finding was that still first best solutions involve dismantling supply barriers and harnessing market forces to massively scale up housing across the market-based spectrum. However, that trickle-down effect will not reach, or at least fast enough, a small subset of Canadians with little or no market income under most reasonable paths. And those gaps are wider than governments can reasonably alleviate through transfers alone on an ongoing basis. And that a do-nothing scenario is also not fiscally appropriate as the knock-on effect on other social infrastructure, from shelters to hospital beds to prisons, are even more costly than the provision of subsidized or social housing. I would reinforce, though, that the paper makes the case that it's not either or, it's not social or market housing, and it's not to avoid a polarization of public versus private provision, rather about the right mix that would serve all Canadians. And so just, stepping back, that I would point out through an economic lens, housing is part of a bigger system, and there are trade-offs and opportunities to consider. That income, investment, and capital that goes into housing is income, investment, and capital not going elsewhere, and these do warrant full deliberation. And just as a final point, also note that Canada is not unique, that home prices to income as a ratio for Canada are about middle of the pack relative to OECD peers. So more responsive supply is first best, but we may need to consider more broadly how markets are structured to ensure suitable, adequate, and affordable shelter for Canadians without stifling the economic growth drivers that ultimately secure welfare gains. I'll stop here. Thank you.
Well, thank you, Ms. Young. And now we'll go to our final witness before questions, and that is from TD Bank Group, Mr. Sondheim, please.
Thank you, Mr. Chair. My comments, my opening statement will be brief relative to my fellow panelists. Hi, my name is Rishi Sondhi, and I'm an economist at TD Bank. I'm the Economics Group's housing market expert, and I'm responsible for publishing research on housing and generating quarterly forecasts for home resales, average home prices in the resale market, and housing starts. The TD Economics team's last official forecast was in March 2024, and we're right in the middle of updating our projection, which will be published on June 18th. However, briefly, I can say that conditions in housing markets have evolved broadly as we had anticipated in March during the spring season. Lastly, I'd like to say that views expressed today represent those of myself and the TD Economics team, but do not necessarily represent the views of TD Bank more generally. I look forward to your questions.
Well, thank you, Mr. Sondhi. And so we've had some technical challenges. So if there are any questions for Mr. Hogue, I would ask that you could pose the question, and Mr. Hogue, you could send those questions to the committee in writing. That's what can be done at this time. So, members, we're going to get into questions right now. In the first round, I have MP Morantz for the first 6 minutes.
Thank you, Mr. Chair, and I want to thank all the economists for being here today. Perhaps I'll start with you, Ms. Young. The government of Canada announced in its budget that it's going to be increasing the capital gains inclusion rate from 50% to 66 and 2/3%. They've just introduced legislation to make that happen this morning, or yesterday morning. From an economist perspective, do you think that the capital gains changes proposed by the Liberal government will lead to more or less investment in home building?
Thank you, Mr. Chair, for the question. Maybe what I'll, I haven't seen details of the legislation, so maybe what I will talk more broadly about is the impact of the costs of some of the headwinds to supply right now, and so very obviously a big one right now are high interest rates. So that has been adding.
I hate to interrupt, but I have a fairly focused issue that I'd like to try and get a response on. The government has said they're increasing the capital gains inclusion rate, which means that builders will pay more tax in capital gains when they go and sell the projects that they built. From an economist's perspective, doesn't that put a damper on risk-taking in terms of building new residential projects? Aside from knowing the details of the legislation, just in principle, as an economist, don't you think that increasing the capital gains tax would make it less likely that someone might build an apartment building or attractive homes?
We certainly know right now in the industry that that development charges are a very big component. Some cite anywhere from 20 to 30% of the cost of new supply, and so that certainly, as a big chunk of what it costs to build, has been a deterrent to new supply.
Mr. Kavich, maybe I'll try the same question with you. Do you think the increase in the capital gains inclusion rate will lead to more or less investment in home building?
Mr. Chair, thank you for the question. So in the context of overall investment activity within real estate, there is potentially an impact either when sellers look to list properties in advance of a tax change, or if the long-term economics of a tax increase alter the expectations of return going forward. So whether, and I personally haven't seen the exact details of the legislation either, so I don't want to comment too deeply on it. Also, real estate's a very long-dated asset, so the impact may or may not be as significant as in some other asset classes. And more broadly speaking, I think as an investment asset class today, macroeconomic conditions are playing the overriding factor here because interest rates have increased, expectations of house price growth have decreased, and current levels of rental yield don't stack up very well to risk-free government assets. So as an investment asset class today, real estate has kind of fallen back in terms of overall activity. So how a capital gains tax change fits in that broader context of weakening activity already would be very hard to flesh out and put a precise estimate on, I would think.
Okay, well, let me ask you a question on maybe a little bit of a different way. If you were going to advise the government on the type of policy they should bring in to deal with the housing crisis, which is what this committee is studying right now and is why you're here, would you suggest to them that increasing the capital gains tax would be one of those policies?
I don't, Mr. Speaker, with all honesty, I don't want to project the impact of a specific tax measure that I haven't fully studied in this context.
Okay, Mr. Sondy, quickly with you, same question. Do you think that increase in the capital gains inclusion rate will lead to more or less investment in home building?
Yeah, so we wrote on this. We released a report that was sort of a fulsome take on the latest federal housing plan, and the capital gains inclusion rate was rolled into that report. And in it, we said that the impact would be highly uncertain. It's difficult to know now because we don't know. We don't have a line of sight with respect to how the legislation will be fully rolled out. But there's some risk that it'll be a negative factor for investment moving forward, which would potentially weigh on rental supply. That's a potential impact. Again, we have to wait to see how the details sort of roll out and wait to see how the market reacts to the information. In the resale market, our thought was that it could cause a near-term boost in listings and supply as potential sellers work to get ahead of the June 25th deadline, which could supply some modest downward pressure on average home prices in the near term.
Thank you.
Morantz, and now we're going to MP Zerowitz, and I guess you're sharing your time with MP Thompson.
Thank you so much, Mr. Chair. I will be asking one question and then passing the baton for the rest of my time to Ms. Thompson. First, I want to start off by saying thanks to all the economists who've presented today, and I apologize that Mr. Hogue wasn't, I'm very sad that Mr. Hogue wasn't able to present to us, but we'll move forward. First, I want to just state very clearly that we have heard a number of testimony at a number of different meetings that for over 30 years, it was the lack of investment of all three levels of government who didn't do enough to continue to build homes in Canada that has led to the current housing crisis. Now, I'm very proud our federal government has released a very comprehensive housing plan. It's a plan that's going to be building more single homes. It's going to be building more rental homes, and it's going to be putting far more investments to ensure there is deeply affordable housing that is created. But it's going to take more than just all three levels of government investing. And so my question is to Ms. Young, what role do you see banks have in potential solutions to the housing crisis?
Just before Ms. Young goes, I'll just stop the time because we have got Mr. Hogue. We're just going to test really quickly to see if it's possible. If you could just start speaking.
All right. Hopefully this time you can hear me okay without any noise in my my microphone.
I'll look to the interpreters, see if you could raise your boom on your headset. Yes.
How's that? Is that a little better now?
Okay, that's perfect. Okay, so Mr. Hogue is also available, and now back to well, you got the question from MP Zerowitz, yeah. Okay. But it was to
Ms. Young.
To Ms. Young, yes.
Okay, thank you very much. First I would, separate two separate issues from the, obviously banks provide capital. They provide capital to individuals to buy homes and also capital to developers to produce homes. Right now you also have to think of demand. And so what we heard from earlier testimonies were around the rules and regulations that, for example, chartered banks are subject to around the kind of risk-adjusted provision of capital for these activities versus the demand that's out there. And so I think, banks obviously, the banks that we represent have a very big role through both of these channels in, both helping Canadians purchase homes and helping find project developers build them. I think what we've seen, including from the economics department, is that we have taken more of an advocacy role in the policy space as well, weighing into looking at some of the issues, some of the numbers in terms of kind of that longer term trajectory that we're on, and looking for, policy solutions that benefit, all Canadians, because a thriving economy is good for Canadians. It's good for banks.
Thank you, Ms. Young. Thank you.
There I am. Thank you. And see how many questions I can get into my time. I thank my colleague for sharing her time. Mr. Hogue, I have to go to you, and I'm delighted we were able to solve the technical issues. In your view, could you speak to the committee and certainly Canadians about your perspective on what led to the housing crisis and the different elements that we need to address in order to move through this predicament? And in a specific lens with the elements is also the all-of-government approach, one being the focus on labor force and really expanding skill sets in the housing construction sector. Thank you.
Right. And this housing crisis, has been, I would argue, decades in the making in some parts of the country. Before the pandemic already, there was a tremendous stress in the Toronto and Vancouver area, for example. But what happened during the pandemic is that stress really spread out across Canada. And now you can arguably say that what we have is a national housing crisis and no longer localized. Now, and fundamentally, as was said before, it is an imbalance between demand and supply, and the supply side has been unable to adjust or respond quickly enough to that very strong demand that we've had over the last many years. And so our view is that the policy side should continue to focus, and we're happy to see that all levels of government now are talking about the supply side, but we need to grow the housing stock in Canada to accommodate all that demand. And when I say housing stock here, I mean the entire spectrum. This is not just on the ownership side. This is also on the rental side. This is also on the social housing side. So we need to address this nationwide issue now on a big push to grow that housing stock to accommodate that demand.
Thank you. And actually, I really appreciate the language around spectrum. And to Ms. Young, you as well, you spoke around housing in a continuum. And we really need to be mindful of the needs for social housing as well as market and everything in between. I'm going to ask you both quickly, if you could speak to the cultural changes needed to really ensure that we do everything we can to address the housing challenge, but what it looks like in urban areas, how we live in our places, how we look at shared space, how we look at the way that we live within our space. I know I'm running out of time, but a quick answer from both of you around what we need to look at culturally as well to ensure that every Canadian has the right to dignified spaces to live.
Do I go first on this one? I think especially in the urban areas, we're talking about more denser housing, and that means the more housing in terms of footprint, so a higher in addressing the missing middle, so kind of a mid-size housing, so space will be more limited. And this is where I think Canadians, especially in urban areas, will have to adjust their housing expectations.
Young.
Yeah, if I can just very briefly pick up on that, I think, one is, first of all, using the footprint that we have already, and that builds on the densification, but also the infrastructure that's out there. I think we also have to figure out, we are a very decentralized country, and so we have to figure out how to make that work, because a lot of the needs are going to be local, and that, on the ground, that's where, whether it's even local government or local nonprofits that are going to be able to best identify the specific needs and their culturally appropriate needs. So those would be two quick thoughts.
Thank you, MP Thompson. And now we're going to go to MP Trudel, please.
Merci, Mr. Président.
Thank you, Mr. Chair. First quick question, Mr. Kakchik. I arrived at the last minute, but I heard you say something that intrigued me. You said, I think, that we in Canada had reached our maximum construction capacity right now. And that's a problem, because we know that in 2023 in Quebec, only 39 housing units were built. In 2021, 77,000. So we seem to be backtracking. So how can we improve our overall capacity to build housing units?
Great, thank you for the question. So I agree. When you look at the Quebec numbers or the Canadian numbers broadly, we have counterintuitively seen new construction activity actually fall over the last 2 years, despite our push to continually build more. And part of that is the reality that we just have broad macroeconomic conditions that ultimately dictate what the market does. And when you have a very aggressive tightening cycle that triggers a decline in housing activity and a pullback in investment activity, you're naturally going to see a market response where construction falls. So it's very difficult to push home builders to, first of all, build in an environment that's not favorable for them or perhaps offers them a lot of risk going forward. And it's also very difficult to, when you have an industry that is already at capacity, to push further beyond those constraints. So in terms of a policy response, I mean, I fully agree with my colleagues that any kind of measures that can improve the elasticity of supply or the responsiveness of supply or the productivity with which we build housing is absolutely a positive for this country and for housing supply going forward. because it can make this market dynamic play out faster. And keep in mind that home builders take time to bring projects to market and to bring units to completion. So if we have an acute demand shock on the ground today, it might be 2, 3, 4 years before we actually complete units to satiate that demand and bring rents back down to a more appropriate level. So any measures on the supply side in that context, I think are very, very important avenues to keep pushing on.
Merci beaucoup.
Thank you very much. Mr. Sandi, you did a study that said that we needed to build 3.8 million housing units to come back to a certain level of affordability. So there are two housing crises in one. I think there's an accessibility issue to obtain housing and affordability, to be able to afford housing. So now I see that the federal programs, and I was told throughout Quebec when I did a tour, is that federal programs are on affordability. So it's to create housing at 80% of the market rate, but we, the taxpayers, were paying to build units at $1,300 in Longueuil, and that seems unacceptable. And 4.5 are costing more in Montreal, and we're paying. So this is for rich people. We're paying for our taxes. So it's not just an idea of building housing units. We have to be very targeted. Social housing, something that people can afford, $600, $800. So how can we solve this, Mr. Sandi?
Right. So with respect to overall housing affordability, I would share some of the views of Mr. Kavchik in that. One, I would say, relatively quickish way that we could sort of handle that would be to work on the demand side. We could slow population growth because in the past few years, population growth has been quite strong. So we could implement measures to slow population growth and bring it more in line with fundamental demand. One factor that I'll touch on as well is construction productivity. So productivity in the construction industry, according to Statistics Canada, lags that of other industries, and it's my belief that that's not a very well studied phenomenon. So I would dedicate some resources towards studying that, because we can improve. If we can improve construction sector productivity, we can boost housing supply without having to bring in more individuals. Of course, another pillar to address labor supply would be, in fact, bringing in more individuals, and that would help. Sort of in that respect. Those are the levers that I would pull to help with respect to housing affordability. I think that would, those would bear fruit.
Question connexe, en fait, les pays.
A supplementary question. So the best performing countries in Europe with regards to the housing crisis, we have France, Austria, and these countries have a larger proportion of housing outside of the market, public, so social housing, also co-ops. In France, over 20% of all of the rental stock is outside of the market. In Canada, it's less than 5%. So we're really far from that. Do you think it would be a goal? I know that the Minister of Housing has an objective of 8% of social housing. Well, of course, that won't be achieved in the next year. I think it's a lacking ambition. Could we be inspired with those countries and try to have a larger amount of our rental stock to be social housing?
I think that's a fair point, given the affordability challenges that we see in the current environment. I will note that the latest federal budget had earmarked some funds towards offering low-cost loans for prefabricated units and for student housing and the like, and some investments in the Affordable Housing Fund, for example, right? So there is some movement in that respect. I do think the point that you make is fair, but I will note that my expertise has more to do with I would say other types of housing starts, detached, semi-detached, towns and rows and the like, and not so much in the affordable housing space, unfortunately.
Okay, merci, MP Trudel, and now to MP Davies for 6 minutes.
Thank you. Maybe I'll address this to Ms. Young, if I could. In September 2022, the Office of the Federal Housing Advocate released a series of research reports that explore the growing trend of financial firms using housing as a commodity to grow wealth for their investors. The reports confirmed this phenomenon, known as the financialization of housing, is contributing to unaffordable rent increases, worsening conditions, and a rise in evictions. They note that the greatest impact of this is on disadvantaged groups such as seniors, low-income tenants, people with disabilities, recent immigrants, and lone parent families. They estimate that about 1/3 of all seniors housing in Canada has been financialized, along with 20 to 30% of purpose-built rental buildings. What policy, first of all, do you agree with that? And are you concerned by it? And what policy responses, if any, do you think the federal government should take towards, I guess, organizations like REITs and others that are financializing residential housing?
So I published a report early last year where we did say the government should set a target for social housing. So we did see that there was a real issue of Canadians, particularly fixed income, that aren't on market income, for whom housing affordability is going to be elusive regardless of what policies are or aren't taken on the market side. So we do think that we need to double the stock. Now, when we use the term social housing, we see it still requires all parties. It requires private sector, it requires nonprofit, it requires government, and so but it becomes a different mix of what roles, and there are distinct roles between providing the financing versus if it's construction or renovation, versus the operations and managing at the individual level. And so if we look at the social housing space, for example, one very positive development has been in British Columbia, and now the federal government is moving in this direction. But basically the acquisition fund idea. So we do have a lot of aging stock that, if it is going to be upgraded, renovated at market rates, it is likely going to be higher, higher value, higher rent.
If I could, Ms. Young, though, I want to focus on sort of the REITs. I'm going to go to social housing. You've anticipated where I want to go next. But I know that REITs, for instance, don't pay any corporate income tax. But do you see any, is there, I think, a sound policy basis to try to curb this trend towards increasing financialization of housing? That's really what my specific question is.
I think that we should be looking at how to leverage capital markets to build more housing supply across the spectrum, and that we also need to have a very focused, specific strategy at the social end, because it isn't driven by market forces. And I do see a role that a number of these aging structures are with REIT companies, and so I think that there is a role to harness.
Now, your quote was, market price housing will likely never be affordable for a serious share of households. That was your quote in your 2023 report. Can you quantify that for me, please? What's a serious share of households?
Sorry, apologies.
Oh, I was just going to say, how many are we talking about?
Yeah, thank you. And Mr. Chair, so in this report, what I looked at was the income quintile renters. So the really acute situation right now are in renters, because normally in an economic cycle, what happens, when home prices, interest rates are high, we see more people going into rent, and rent is a more kind of a relief valve. It's a cheaper option. But what is very unique about this cycle is that rent, because of that population influx, hasn't been that relief valve. And so, so consequently, where the real vulnerability and the affordability crunches are in those renter Canadians. I quantified it looking at the bottom two income quintile renters. So if you think a third of, Canadians are renters, well, 2/5 of that, so we are, and those tend to be, a third of those. So it is a material number of Canadians, and it is the ones that are not securely attached to the workforce. So that
right. I probably should have continued your quote. You said, and easily those in the lowest income quintile, based on current trajectories, you've now raised sort of maybe the two lowest income quintiles. So are we talking 40% of Canadians?
It's sorry a third. We're talking more. About a 10%. I think is a good number. That is a number that would be classified as core housing need. So 10% of Canadian households.
Okay. Now, I wanted to move into social housing. You also, in the same report, said, quote, Canada's current stock of social housing defined as subsidized rental units is among the lowest across OECD peers at just 3.5% of total dwellings. Can you situate us in terms of our OECD peers? And maybe sort of give us some context for that. If we're at 3.5%, what is a sort of an example of a good OECD member peer who is doing better? What kind of percentage do they have?
So at the very high end, we have, kind of in the double digits from, 20, 30%. At the low end, we've certainly got, half the OECD peers lower. I would say that the market constructs are quite different. So, what we didn't, we admit it's very simplistic to say we're very mediocre, if not poor relative to OECD. We said double. Again, there wasn't a lot of science behind that other than we really have to do something here, is that market forces aren't going to work for these Canadians. Doubling, is pretty ambitious. It's a start. It's not likely going to solve all the problems, but we have to start thinking about it. We have to start thinking about this sector.
So in that same report,
MP Davies, that was we're over time, but we are going. We're transitioning. We're going into our second round. It'll be a truncated round, but members. Mr. Hogue from the Royal Bank of Canada was not able to give his opening remarks. I think we'd want that on record. So if you're ready, Mr. Hogue, your opening remarks, if you could just deliver those to the committee members, because of technical difficulties, we couldn't do it at the start. Yeah.
Right. It's not as much as whether I'm ready or whether the microphone is ready. Yes, but I mean, I think it is clear by now that Canada is in a housing crisis. It is now a nationwide issue and no longer an issue that's localized in the expensive markets in GTA and in Vancouver. And a lot happened, and that essentially a perfect storm occurred during the pandemic, where you had housing needs that changed very, very quickly. The policy response to the health crisis and provided tremendous firepower for a lot of households to buy homes, at least in the initial part of it. The Bank of Canada cut interest rates. So all this really stirred a fire for housing demand and caused home prices to spike. The home prices that increased more than 50% nationwide in the space of 24 months. And then once inflation really flared up, the Bank of Canada hiked interest rate in a historic way. That from a home ownership perspective now got this double whammy of higher prices and a higher interest rate that really hammered housing affordability. So today, this is what we're dealing with: home ownership affordability. That is now that got away from many Canadians, many of them now aren't pushed into the rental market. That's created tremendous pressure on rent. And vacancy rates have reached historical lows. So it is a very broad-based issue that we're dealing with, very complicated, and so we'll need a very concerted effort to address this issue from all levels of government.
Thank you, Mr. Hogue. Okay, so members, I'm looking at the time. We did have some interruptions. We'll go a little bit over each party, 3 to 4 minutes. Okay, so we'll start with MP Lawrence for the first.
Thank you, Mr. Chair, and I will be splitting my time with Mr. Epp, but Ms. Young, I'd just like to put actually a quote that you gave on a podcast not too long ago, and just wanted to make sure you agree with it. It's specifically with respect to the capital gains. You seemed unwilling to go into those waters despite my question or Mr. Moran's questions, but you did before, and I just wanted to confirm that you feel the same way. You said, and I quote here, And yet we have measures like this that are clearly punitive to investment in Canada. You're talking about capital gains. So it is a big change. And the signal probably doesn't sit well with a lot of folks in terms of what it means for competitiveness and agility of Canada's landscape. Do you still agree with those comments?
Thank you, Mr. Chair, for the question. Yes, I still agree with those. I agree with my other colleagues' comments made as well. First of all, situating in the bigger picture of what are creating some of the headwinds and the uncertainty around it. I'd also go back to my, opening points about seeing housing as a system. And this is one example where, we do need to look overall at our tax structure.
Thank you. My time is limited, especially since I'm splitting with Mr. Epp. But I just want to, if I could just get a brief answer to this, do you believe, as I do, that a capital gains taxation is unhelpful? A capital gains increase is unhelpful?
I think certainly the signal is negative in that we need to look more broadly at our tax system to reorient it towards growth enhancements.
Thank you, Ms. Young. I'll give the rest of my time over to Mr. Epp.
Thank you, Mr. Chair. And at this time, I'd like to move the following motion: that the committee order a fully redacted copy the government's economic analysis on the impact of the federal fuel charge and the output-based pricing system, referred as Reference Information Request IR 0776 in the Department of Environment and Climate Change's Canada's letter to the parliamentary officer dated May 14th, 2024. And given that this information is already produced, the committee order this file within 24 hours of this motion being adopted and report this finding to the House. Thank you, Mr. Chair.
Okay. Thank you, MP Epp. And I've got MP Lawrence, then MP Baker to speak to this.
Thank you. And I'm hoping this will be a relatively quick discussion and we can move to a vote and carry forward with what I believe has been some excellent testimony. Of course, we heard in conversation or in discussion with Mr. Yves Giroux, the parliamentary budget officer, that in fact there exists a report that, at least in accordance with Mr. Giroux's comments, would validate his findings that 6 out of 10 Canadians are paying more into the carbon tax than receiving. I should point out that the Liberals do say 8 out of 10, but they only tell half the story, as is often the case. That 8 out of 10 is only with respect to financial or direct payments. When taken in account the economic or the indirect payments, and by what do we mean by that? We mean the cost the carbon tax adds to trucking the food, that adds to farmers, that all funnel its way down to eventually the Canadian consumer, that, as Mr. Giroux said, the majority of Canadians will face a net loss. And one question as to, of course, he did make a clarification on the 17th, and when asked by the PS, the parliamentary secretary for finance, how he knew that his numbers were correct, he said, well, they were the same as yours, which was quite telling. And then Mr. Morantz, an excellent round of questions, asked him to confirm that there was a report. He confirmed that there was a report, and further, he went as far enough to say that there was a gag order which restricted him from providing the full analysis. So, you know what? I haven't.
Au règlement, Monsieur le Président. C'est quoi ce gag order? J'ai oublié. Étant donné.
Point of order. Given the amount of people that would like to speak on the motion, I'm asking to free the witnesses.
Yep. Members, I think that may be a good idea because I do have MP Lawrence, MP Baker, MP Summity, MP Zerowitz, and then MP Morantz on my list. So on that, we do want to thank Mr. Hulk, Mr. Sondhi, Mr. Kavsik, and Miss and I apologize here. Ms. Young, yes, Ms. Young. So thank you so much for coming before our committee on this housing study and for all the information that you've provided committee members. And we wish you the best with the rest of your day. So you're released. Thank you. I appreciate it. Okay, so members to our list.
I'll conclude shortly because I want to give the courtesy of allowing a response, and also hopefully we can get right to a vote. And so I would just conclude by saying Transparency is the best disinfectant. And so if this report does exist, as Mr. Giroux, the parliamentary budget officer, states it does, and it does validate Conservatives' conclusion that carbon tax is causing Canadians to suffer a net loss, I would respectfully ask that that we all vote yes and get this report to our committee.
Okay, thank you, MP Lawrence. I'm going to MP Baker now.
I was on the list.
You are on the list. Yeah, I've got MP Baker, MP Samari, MP Zerwitz, MP Morantz, MP Sorbara. Yeah.
Thank you.
So Chair, I'm noting the time that we're almost at the end of our meeting, 1 o'clock. But I also wanted to note that, just recently, all parties kind of came to an agreement on the work that this committee would do going forward, the issues that we would study, how we would allocate our time, and we came together on a programming motion. For those watching at home, that basically means a motion that lays out the plan of where we're going to spend our time, what we're going to study. So, given we had that plan and agreed to, I think we should remain focused and stick to that plan. I think this is a new edition of a new topic, either for debate here and for further study. I don't think that that's appropriate, given all the parties came together and came to an agreement. So, but that said, I move that we adjourn debate.
Okay, there's for adjournment debate. So, clerk, if you can poll the members.
Mr. Baker. In favor.
Ms. Zerwitz.
Adjourn debate.
Mr. Sorbara.
In favor of adjourning debate.
Ms. Thompson.
Adjourn debate.
Ms. Brière.
Adjourn debate.
Mr. Chambers.
No.
Mr. Epp.
No.
Mr. Lawrence.
No.
Mr. Morantz.
Definitely not.
Monsieur Sainte-Marie. Contre. Mr. Davies.
Yes.
Yeas pour 6, nays contre 5, 5.
Okay, so debate is adjourned, and members, we have released the witnesses. So shall we adjourn? Yes. Yeah. Okay. We're adjourned. Yeah.